Why trading is the hardest way to the easiest money. Hi, my name is Emma and welcome on my YouTube channel. There is a famous phrase that says, trading is the hardest way to make easy money. And honestly, it couldn't be more true. At first glance, trading can seem like a fast track to financial freedom. Just click a few buttons and you're rich, right? But in reality, it's one of the most mentally challenging and emotionally draining ways to make money. It tests your patience, discipline, and resilience. Think about it. But stick around, because at the end of this breakdown, I'll share the interesting fact about the biggest liquidation in the crypto world, something every trader should know. Before we dive in, make sure to check out my Telegram channel. If you are serious about becoming a better trader and want access to proven strategies and real-time market analysis, my channel is the place to be. You'll get the insights you need to navigate the market and avoid the common mistakes the most traders make. Click the link in the description and join the community today. Now, let's get into the details. Here are 6 reasons why trading is so hard, but if you master it, can lead to what seems like very easy deal. First of all, the emotional roller coaster. Trading isn't just about charts and numbers. It's a battlefield for your emotions. The moment you enter a trade, you are faced with fear, greed, excitement, and doubt. These emotions can cloud your judgment and lead to impulsive decisions like closing a position too early or chasing after bad trades. Here is a piece of advice. You need to develop emotional discipline. One strategy is to have a plan for every trade. Define your entry, exit, and risk before you even enter the market. Stick to that plan no matter how tempted you are to deviate. Unpredictable markets. Markets are inherently unpredictable. No matter how skilled you are or how well you've analyzed the setup, there is always a chance that the market will do the opposite of what you expect. News events, economic reports, or even a random tweet can send the prices in the direction you didn't expect. And here is the advice. Always trade with risk management in place. Use stop losses and never risk more than you can afford to lose in a single trade. This will protect your capital and keep you in the game long enough to learn and improve. The illusion of easy money. See, social media is filled with stories of traders making huge profits overnight, leading people to believe trading is easy. But what you don't see is the years of hard work, sleepless nights, and failed trades that often come before those big wins. Many traders fall into the trap of thinking they can double their money quickly, which often leads to reckless trading. The advice here is adjust your mindset. Understand that trading is a marathon, not a sprint. Focus on consistency rather than chasing huge profits. Small, steady profits over time will build your wealth more sustainably. Another thing is the learning curve. Becoming a successful trader is a long and steep learning curve. It requires mastering technical analysis, understanding market psychology, developing a strategy, and constantly adapting to new market conditions. Many people quit before they even enter the initial phase of learning because it's just too overwhelming altogether. And the advice I want to give you here, don't rush the process. Give yourself some time, understand the market, and practice on demo account before entering with real money. Gradually improve your strategy, because that's really important. Another one is self-sabotage. One of the biggest challenges in trading, whether it's overtrading, revenge after a loss, traders often get in their own way. This self-sabotage can be due to the overconfidence after a winning streak or frustration after a loss. Implement a strict trading routine and stick to it. This means limiting your trades, taking breaks when needed, and always following your trading plan. And last but not least, overcoming failure. Every trader experiences losses, and sometimes these losses can be devastating. The real challenge is how you respond to failure. Many traders quit after a big loss or let it affect their confidence, leading to even more mistakes. But the truth is, failure is the part of the process, and how you can recover from it, that's what separates successful traders from those who give up. The advice here is to accept losses as part of trading and use them as learning opportunities. After every loss, ask yourself what you could have done differently. Keep a trading journal to track your progress and emotions. It will help you learn faster and avoid repeating the same mistakes. Once again, don't forget to check out my Telegram channel if you are serious about becoming a better trader. I share strategies, tips, and real-time insights that will help you navigate the ups and downs of trading. Click the link in the description and join the community today. Trading is without a doubt one of the hardest ways to make money, but it's also one of the most rewarding if you stay disciplined and continue to learn. The emotional highs and lows, the constant unpredictability, and the never-ending learning curve make it a challenge. But for those who master it, the rewards can seem like easy money. Interesting fact before we go. Did you know that the biggest liquidation event in the crypto world took place in 2021? It primarily affected small traders. Over 10 billion was liquidated in just one day as Bitcoin price dropped sharply. And over-leveraged traders were the most affected, proving how dangerous it can be to trade without the risk management. It's a sobering reminder, no matter how confident you feel, the market can humble you if you're not careful. So be careful, stay awesome, and I will see you very, very soon. Thank you for watching. Bye.